From FXEmpire, this is Chris taking a look at the S&P 500. The S&P 500 has tried to rally slightly during the early hours on Thursday as we continue to look at this through the prism of a market that doesn't really know what it wants to do in the short term. That makes a certain amount of sense considering that we have the non-farm payroll numbers coming out on Friday. And that, of course, is going to be a major driver of interest rate expectations. Granted, Jerome Powell did not sound overly dovish during his press conference on Wednesday, and we have had an outsized reaction to it. I would love to see the S&P 500 drop down to the 4,800 level because, quite frankly, that's an area that was previous resistance, and it should now have a certain amount of market memory attached to it. Furthermore, we have the 50-day EMA that has substantially crossed the 4,700 level, so I think that is going to be support as well. Longer term, it is more likely than not only a matter of time before we get to 5,000, but this pullback is something that we have needed for some time. And that being the case, you have to look at this through the prism of value. The S&P 500 is a market that, of course, is driven by just a handful of stocks. Like most indices in the United States anymore, it's not really a stock market. It is an ETF. And that tells me everything that I need to know. You just follow the same 7 stocks everybody else owns, and therefore you will do quite well. If we break down below the 4,700 level, that could lead to a much deeper correction, but I don't think we're there yet. I think Wall Street is still looking for those interest rate cuts later this year.